Let's talk a little bit about some other news out there today, too. The electric vehicle sector is one of the hottest parts of this market, and it's not just Tesla. Take a look at some of these stock moves. Chinese automakers Li Auto and Xpeng have doubled since their IPOs, while battery maker QuantumScape is up about 440%. But those stocks have nothing on NIO. That stock is up more than 1,600% just in the last year. That makes NIO worth nearly as much as Ford and General Motors combined. Joining us right now to talk about the EV sector and if what we're seeing is a bubble is Gordon Johnson. He's the founder and CEO of GLJ Research, and Gene Munster, who's the founder and managing partner at Loop Ventures. And Gene, I'll start with you. Let's talk about the sector overall. Do you think that the EV sector is overvalued at this point?
Becky, I want to start with an important learning that I've had in tracking these transformational tech themes, and it's they tend to take much longer than we anticipate to come to fruition, but in the end, they end to be much bigger than what we ever could have imagined. And I think a great textbook example, and I think an indicator about how to think about the EV market is think about what happened in Amazon. It went from $3 to $90, from 97 to 2000, and then it blew up and went to $7. Today, of course, it's $3,100. Perfect use case. And so when I put this together and think about EV and autonomy, this is a massive market. It's the transportation market, car market's $2 trillion, the broader transportation is additional $2 trillion. We're talking $4 trillion. That compares to the smartphone market at $500 billion. So it's understandable, the enthusiasm around these stocks. I just caution that this will take longer than people think. And I would put it all together, Becky, and say this. If you're trading these stocks for a one-year time horizon, that is a dangerous endeavor. Ultimately, if you're investing in these companies for 3+ years, that's wise.
Gordon, you've got a much dimmer view of all of this. You think it's just gambling at this point. And Gene makes the point that if you're looking at the short term, you could face some pretty significant ups and downs along the way. But what do you think longer term for the EV market overall?
I mean, I think the EV market is a massive bubble. I mean, let's take Tesla. So if you look at Europe, right, we have sales for this year. Europe was the biggest EV market. Europe, US, China. Europe doubled in size this year. Tesla actually saw its total volumes in Europe fall. Why is that important? Europe is the only market with competition. So when you see competition, Tesla is being outsold. The ID.3, which is VW's new EV, is selling more than Tesla's Model 3, and the Porsche Taycan and the Audi e-tron are selling more than Tesla's S and X in the luxury market. Listen, if you look at the BEV market, it's only 1.8% of EV sales, despite, and that's from 0.47% in 2009, despite billions of dollars in incentives. And if you take a step back and look at NIO, I mean, this is kind of crazy. NIO's stock is trading at a market cap of roughly $98 billion, above VW. NIO sold 47,000 cars this year. VW is estimated to sell around 10 million cars, roughly 175,000 EVs. And the other thing with NIO is, and you got to look at the details here. You can't just say people being in the stock for 3 years. NIO is effectively promising people a free battery if they buy their car. And that's roughly 30% of the cost of the total car. So if you look at the actual margins of this company, you're talking about margins that are going to be grossly negative, yet analysts are saying buy this stock for 3 years. We think people are being misled. And we think as the competition comes in, we think guys like Tesla and NIO, who can't match the manufacturing prowess of the VWs and GMs, are going to literally get crushed. And we think that, like you said, what's driving this market really is you see a lot of retail traders trading options that shouldn't be. You sign up to a Robinhood account, you put in $2,000, you can trade options on margin. You're talking about 11 times leverage on an option we looked at just last week. So if a guy puts in $1, the guy writing that option has to buy $11. That's driving the stock market. That's enabled by the Fed. When the Fed cuts rates and they stop all this money printing into the market, we think you're going to see a number of bubbles explode, including the EV bubble.
Shepard Smith here. Thanks for watching CNBC on YouTube.